In this month's economic update, Kaplan Professional Education's Trevor Trahan speaks to an industry economist about the short-term domestic and global economic outlook.
Hello, welcome to Kaplan Professional Education's monthly economic update. I'm Trevor Trahan, and this month we're speaking to Wilson HTM's investment advisor, Peter Esho. Thanks for joining us, Peter.
Thank you.
What did May's budget announcement tell us about the state of the Australian economy?
Not really much, to be honest. Look, the budget was as expected. Budgets are always very political. And so I think what came out of this budget was just more talk around politics in terms of an actual glimpse into the Australian economy. We didn't really receive much. The actual deficit sounds large, but as a proportion of GDP, it is still quite low at around 1%. So nothing really came out of the budget to cause a revision in the credit rating of Australia, for example, or assumptions around growth or the composition of revenue. So it was basically in line with expectations, and I think that's why the market shrugged it off. The currency did fall, surprisingly, after the budget, but I think that was due to different factors.
The UK government is considering a referendum over the region's EU membership. What would be the likely economic implications for both the UK and the rest of the EU should the UK cut itself loose?
Well, again, this is very political. I think the UK is already quite separated in the fact that they have their own central bank, they have their own currency, and really that's where the problems in Europe have been, around that common central bank, common currency, contagion in the peripherals. So, you know, for the UK to leave, there will be political ramifications. There might be certain ramifications around the financial sector. I think there probably won't be as high a risk unless there are restrictions around lending and investment and taking deposits. If we do see ramifications there, then I think sure, you know, there is financial risk. But I think again, it's largely political. You know, I don't think trade will be disrupted too much. There might be certain industries that, you know, have one-off negative factors, but a lot of the hard work the UK has already managed to mitigate by having that separation in its currency and central bank.
President Obama says the American economy is, in his words, poised for progress. The housing market is certainly improving, but is the president's overall optimism justified?
Well, third question, and I'm going to go back on politics again. We're talking about a US president that has managed to you know, seek re-election and was successful in light of some very challenging economic circumstances. And I think, you know, if we leave politics aside, what we're seeing on the economic front is that the pace of US improvements in its economy is gathering steam. There is good news, but I think there needs to be better news out of the US. I don't think we're at the point yet where markets are quite relaxed around the data coming out of the United States. And I think that's why we're seeing the Federal Reserve, for example, still, you know, very, very aggressive in not just one round of quantitative easing, but you know, 3 rounds of quantitative easing now, and very low rates. But I think what we might see is an improvement in that pace of expansion towards the second half of 2013, and that's really the big issue in markets at the moment. I think that's why we're seeing base metal prices declining as the US dollar gathers strength. That's why we're seeing the Australian currency, for example, falling against the US dollar, because of the view that the US is probably at that point where, you know, the improvement starts to pick up. Consumption is very important for the US economy. Consumption is a very large part of GDP. And so, you know, confidence, jobs, and that's why the Federal Reserve has set 6.5% unemployment as its target explicitly. So, you know, the confidence in the US, building and consumption, they're the key things that will really drive the improvement in the US economy.
According to the Asian Competitiveness Annual Report 2013, the UAE is now considered the 3rd strongest Asian economy, moving ahead of China. How has the UAE leveraged itself into this position?
Well, let's put that into context. It's nowhere near the size of the economy of China, for example. I think what you're referring to is some type of a measure across a whole range of factors which scored well, and China is still a relatively closed economy. So I think that's perhaps why it might rank higher than China, but it is absolutely dwarfed by China and Japan and Asia, for example, in terms of the size of their economy. Well, when we talk about the Emirates, you really have to separate Abu Dhabi and Dubai. Dubai gets a lot of the glitz and glamour and the headlines, but Abu Dhabi is the capital, and that's where a lot of the natural resources are sold, and where a lot of the revenue is derived from. And so, as energy prices have remained high, there has been that constant stream of income coming in while they're expanding production and also looking at diversifying their petrochemicals industries overall. And so, the income coming into that economy has been quite strong. They've put in a lot of reforms around opening up, business activity through places like Dubai, for example. Their stock market relaxing. And they took a lot of pain during 2009 and 10 when Dubai had those issues. But I think what we're seeing is some of that confidence coming back, petrodollars being recycled, a lot of problems in the Middle East, and a lot of money leaving places like Syria and Iran, for example, needs to be parked somewhere, and it's washing through the UAE. So it really is a combination of some very, very favourable factors. I think the biggest problem the UAE has had for investors is diversification in terms of the exposures. There are a lot of brands, very large brands like Emirates, for example, that investors would like to have a large, open, transparent exposure in. The UAE has still not managed to attract significant IPOs like Glencore, for example, or the luxury brands which have been very successful in Hong Kong and in places like Singapore in terms of listings. And so, I think there are still some vulnerabilities that need to continue diversifying in terms of the exposure for investors right around the world, and they need to continue with those reforms that have seen them ranked favourably for the time being. So if energy prices do come down, they have that diversity in their economy.
Brilliant. Thanks for your time, Peter.
No problem.
That brings us to the end of the June PD sessions. Thanks for watching. If you have any feedback or questions, please drop us a line at pdcontent@kaplan.edu.au. I'm Ron Wilson. I'll see you again next time.